Next question. Is it true that if I'm living and working outside of the US, I make less than 100 grand, I'm not taxed? I'm a US citizen. Sarah, that's a good question. It really depends. Now, what I think that's a popular misconception. That's a popular, not a misconception, but a misunderstanding. So I'll take you back to the source. It comes from section 911 of the US tax code. And that speaks about something called the foreign earned income exclusion. And my emphasis was deliberate on earned, because if it is that if you're making 100 grand or less, but that is earned income, and you may be able to enjoy the foreign earned income exclusion, which, to be honest, is the best tax break available to US exposed persons, US citizens and green card holders who reside and work outside of the US. But it must be earned income. So it does not include interest, it doesn't include dividends, it doesn't include basically unearned income. So yeah, so it's very, very specific. So to be honest, it really, someone needs to sit with you and understand what is the nature of your income. Is the 100 grand that you're earning, is that like interest, or is that dividends, or is that earned income? So you performed a service, or you're selling a product, you engage in some sort of business activity for which you're getting that in return. So if it is earned income, then you may be able to trigger the foreign income exclusion. And as the name suggests, you would exclude that income from US taxes. Now, there are two ways of qualifying for that foreign earned income exclusion, earned income. So the first is the one that everyone gets. So it's quantitative and objective. So that is the physical presence test. So once you stay out of the US and you're not in US airspace for more than 30 days in any calendar year, typically you will qualify for the foreign earned income exclusion under the physical presence test. The other one is subjective and qualitative, and that's the Bonafide residence test. So that's more or less like a test of intent, like where's your center of life, where's your heart? And if your true home is in another jurisdiction, so your family's there, you own or you rent property there, you have a job there, you pay bills there, you belong to social clubs, whatever the case may be, that is genuinely where your life is right now, then you may be able to enjoy that even if you cross 30 days in the US. So for example, you're trapped because of a lack of flights or whatever, you still may be able to enjoy it because of that bona fide residence test. But however you qualify as either physical presence or bona fide residence, once you do, your first, well, it moves higher with inflation. So I think for last year, it was like 107,600 or something like that. So it goes up each year with inflation, but that income will be sheltered from US taxes. So yes, speak to your tax advisor, but you still need to report it. So even though no taxes are payable, you still need to file a US tax return. The filing threshold for return is pretty low. I think for married filing separately, $5. So if you made more than $5 outside of the US, again, no taxes may be due, but you may still have to file a return. Hope that helps.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.